Ladies and gentlemen, good day and welcome to NATCO Pharma Q1 FY22 earnings conference call hosted by Investec Capital Services Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anshuman Gupta. Thank you, and over to you, sir.
Thank you, moderator, and good evening, everyone. On behalf of Investec Capital Services, I welcome you all for NATCO Pharma's 1Q FY22 earnings call. Today, we have the senior management represented by Mr. Rajiv. He is the Vice Chairman and CEO. And we also have Mr. Rajesh. He is Vice President, Investor Relations and Corporate Communications. Over to you, Rajesh, sir. Thank you.
Yeah, thank you, Anshuman. Again, good evening, everyone, and welcome to NATCO's conference call discussing our earnings results for the first quarter of FY22, which ended on June 30th, 2021. During this call, we may be making certain forward-looking statements, which are predictions, projections, or statements about future events, and anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. I'd like to state that the material of the call, except for participant questions, is the property of NATCO and cannot be recorded or rebroadcast without NATCO's express written permission. We will begin the call with broad highlights and followed by an interactive Q&A session. We hope you've received the financials and the press release that was sent out earlier. These are also available on our website. So we will open up for Q&A and then we'll discuss the details. Over to you, Rajesh. Thank you.
Shall we open the floor for questions?
Sure, let's go.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Ravi Dharmshi from ValueQuest. Please go ahead.
Sorry. Just wanted to check what is the status on the molnupiravir trials and what is the timeline and when can we expect kind of an emergency use authorization for that?
Ravi, we already filed for approval, Ravi. So all the data has been shared. We have shared our interim clinical data and it has been filed with DCGI's office. They are evaluating the file. At this time, I don't have any feedback on when they will any timelines or not at this time. But we have filed all the data, I think, and we have filed our clinical data and all the chemistry data and all that stuff is already done. So the ball is with DCGI at this time.
Right. One more question on the recovery on the domestic business front. If you can give us some sense on how the things are now today, now that the second wave has also subsided, is the business back to normal or where are we in terms of recovery?
I think the domestic has done extremely well last quarter, driven by the pandemic. So we had a few products which were used in the pandemic. So I think so we had a good spurt of we had good earnings in the month of especially in the month of April, May we had very good earnings. May it kind of petered out. Sorry, June it petered out. So I think April, May we had very good sales. Regarding the pandemic, I think June kind of slowed. July, it dropped dramatically. August, we are seeing things are slowly, this slow increase. I think that's what I'm feeling, at least based on the secondary sales of our product from what I'm getting. Things are, I think there is some increase in cases. I think that's what we are seeing. Again, you can never predict the pandemic, Ravi. When it happens, and but our sense is that I think in the next few months, I think there'll be an increase in sales.
Great. Just one last question from my end. In one of our previous interaction, I think you had mentioned that there were some gaps in your overall strategy. One was a domestic piece, and second was maybe a front end in US. So just wanted to check if there is anything happening on that front. Have you taken any steps for the same?
We are shopping for a US front end. I think we said that in the past. I think we're still shopping. So we're looking at quite a few transactions, but nothing definite at this time where I can say that we're close to a transaction. But we're shopping. So I think that is clear. Regarding domestic as well, we're always looking for opportunities as well, and we're shopping there as well. So I think, but between the two, I feel, US valuations are far more reasonable than, what's happening in India. So I think that's my sense. But again, we're always looking for an opportunity, and I think that's where we are. Yeah.
Okay, thanks, and I'll join back for the queue for any further question. Thanks.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good evening. Am I audible?
Yes, sir.
You are.
Yeah.
Please go ahead.
Thanks for the opportunity. Rajiv, would you spell out how much of the domestic sales would be from COVID and from our regular onco and other businesses? Would it be 50-50 or something?
For strategic reasons, we don't like to, spell out literally how much we made in a particular product. I think if you look at the base sale, a good increase has happened on the base sale. So I would attribute a lot of it to COVID. A percentage itself, top of mind, I don't have an answer to your question, my friend. I think that's the best way I can do. But I think good percentage of the growth has come from. If you see, I think a good trend you can see from last Q and the present Q, and I think you see a dramatic increase in domestic. So I think if I remember percentages, it's almost a 70% increase compared to the previous quarter. So I think a lot of it is attributable to COVID.
Okay. And on the export side, if we go by the sequential run rate, in March we were at 150, and this quarter we are at 145. And if we look at it, we had a few product approvals which we had mentioned that we have launched. So is it like a lot of profit contribution, or the partnership sharing will come in Q2, Q3, or is there some?
Yeah, even though we got every approval and actual launches happened in this quarter, because logistically it took us a while to complete all the 3 validation batches and send. So we didn't launch literally on the day of the approval. So there was a lag between the actual approval and the launch. So the actual launch of everolimus, the immunosuppressant, where the second generic happened in this particular quarter. So there's a bit of a lag there. And strictly it's not comparable because we had the upside of chloroquine and oseltamivir. And now we don't have any sale on those 2 products, or we have minimal sales, so to speak. So I think that's the reason why you're seeing a variance in the numbers. But I think the exports will get better. I know they've been soft last quarter, but I think there was 2-3 things happened last quarter. I think same quarter last year. COVID was raging, and there was a lot of supply chain disruption. So a lot of people bought a lot more stock than normal. That was one reason. And then the chloroquine impact, and of course the oseltamivir impact. So these are missing now. So I think that's the reason why they look a little soft. But the business is fairly solid. I think you'll see in Q2 and Q3 things will be fairly steady. And of course we have our jackpot coming by end of the year. So I overall for the year, I think we are very excited about our export business.
And last question, on Nexaware, if you go by Bayer own presentation, they themselves are saying that the sales are dropping year on year. Do you think that is still a good enough product for us, or would you say by the time we launch, how do you see the position on that product?
I think it's a good product. It's a reasonable size product. I don't remember the sale numbers. I think it's like 300 odd million, if I remember right. In that range. I don't remember the exact numbers, so I don't want to guess, but I think in that region, this plus minus this bit that way. It's a reasonable launch. See, look at it like this: we are the sole FTF, yeah. So we have the 180 days, so we'll have a reasonable upside. So whenever that happens, I mean, we're not supposed to discuss the date, but whenever it happens, it will be a good one. I think that's all.
Sure. Thanks a lot. I'll come back in the queue.
Okay, sure. Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Mr. Purnawala from Anand Rathi. Please go ahead.
Yeah, hi. So 2 questions from my end. First, on the India business, what is the status on Apixaban, and what is the kind of traction we are seeing, considering I think we have relaunched this product in Q1. So could you throw some light on the new launches on the India business as well?
I think, as I said earlier, I think the COVID portfolio did very well. I think Apixaban, amphotericin B, Fosconazole, Baricitinib, these are the 4 major COVID products that we have had. I'm not doing a split of the sale for strategic reasons, but I think these 4 are the key products, and I think out of them, a lot of the products had very little competition, so that's why we did very well in that particular quarter.
Yes, sir. And my next question was, is there any update on the crop protection or the agrochem segment? I mean, could you provide some highlights on what is the status of the litigation, and are we prepared for launch maybe by next year or so?
Okay. So let me play it out. So basically, so we have already announced, as you know, in early July that we got injuncted by the Delhi High Court. So we have appealed the decision. So, and I think the judges slated for hearing in I think around September last week. I think, if I don't remember the dates exactly, I think it's around September 20th and 21st. I think he gave 1 day to them and 1 day to us. So hopefully, I mean, again, it's all subject to the hearing going on time and everything going well. So if the hearing is concluded in September, assuming, I mean, again, that's a big if. With courts, you can never guess, but all goes well and we're able to conclude the hearings by September end, then the double bench will reserve, the division bench will reserve the judgment, and then hopefully we'll get a decision which is in our favor. So, and we'll see how it goes. We'll update, hopefully by the next quarter call, we'll have some clarity where the case is. And so I think we are hopeful about our legal position, and we believe that we have a very good case, and our view is that, if the hearing goes well and we're able to conclude on time, I think we could come back for Rabi subject to the court decision, which is the end of the year, Rabi season.
Sure, sir. Thank you so much.
Thank you.
Thank you. Next question is from the line of Shivram Gupta from Aster Mine. Please go ahead.
Hello, Rajiv Garu. My name is Shivram. I have 2 questions.
Sure.
First question is, with some of the cash generating drugs that are going off our portfolio, like the Tamiflu and Hep C and chloroquine, what is our next portfolio going to be in the next 2 to 3 years? That's my first question. And second question is, we've heard some information from the social media and all, that the Morgantown plant has been shut down, which basically does some quality checks for Copaxone. How are the Copaxone sales, and how is it going to impact our sales, and is there any impact at all?
Okay. I'll start with the portfolio. I think in the near term, obviously we lost the big ones, but I think we have survived reasonably well. I think I know we have not grown, but our profits have stayed flat in the last couple of years in spite of the fact that we lost our blockbusters. In terms of the portfolio update, I mean, we already spoke about it, but I'll just reaffirm it again. So for this year, my friend, I think there are two big ones. So I think the chlorantraniliprole appeals verdict will be a very critical, verdict to look out for. So if that appeal goes in our favor, then there's a reasonable upside that could happen in this financial year. And another product that the other gentleman referred to was molnupiravir. Again, we are very bullish about this product, so we are well prepared for the launch of this product. And this is another and this is used in anybody who has mild COVID or in the first line. So and we all know COVID is going to be around for a very long time. So we believe that this product has very good potential for the coming few years. So in addition to these two, obviously, we have lenalidomide launch in some major markets. And publicly, we already disclosed that the US launch is in the March quarter of 2022. So some of the earnings will come from there. And the other markets also is going generic. So we'll disclose the date as we get closer to the launch date. So I think I'm overall fairly bullish, and our everolimus portfolio also should do reasonably well. So we have very good, reasonable launch quantities that we have sold in this quarter. So I think that will stabilize the business. But I think for a reasonable upside, I think these three things will be very important: molnupiravir, the agro product, and lenalidomide. I think these three are the big things to watch out for the next few months. Okay. And the last question you had was on the Morgantown shutdown. We have an alternate site where they do the testing. So Morgantown shutdown has no.
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर ठेवला आहे.
A request from you, please. Yeah. So to answer your question, yeah, they have Mylan has an alternate site for testing the product. So the shutdown has no impact on us. Okay. Thank you. Next question, please.
Thank you.
Thank you very much. The next question is from the line of Ankush Agarwal from Artifacts Capital. Please go ahead.
Yeah, hi Rajiv. Just one quick one. In case the agrochem decision doesn't. Hello, I'm audible.
Go ahead.
Yeah, Rajiv. In case the agrochem CTPR decision doesn't go in our favor, in that case, what kind of cost or damages are we looking at in terms of say litigation costs, damages, or inventory write-off? If you can highlight something on that part.
There's no damages, no, because we have not launched the product, so there cannot be damages when you're not caused any damage to anyone. Yeah. So legal costs are the only one. They're already expensed in the balance sheet. So it's
right. In terms of inventory.
So that is not much. Inventory, yes, we have built up inventory. I think we are very clear that if you want to launch a product like this, you need to build inventory. I think the best case scenario is if we get the favorable verdict, then otherwise we need to carry the inventory into next financial year. The patent goes off in August 22, so that's the worst case scenario. So the launch will get delayed to August 22. I think that is my understanding.
Right, but we won't be needing to write off the inventory, right?
One moment. Let me complete answer the question.
Yeah, sure.
Write-off and all, I'm not taking a write-off. We believe that if we don't sell it now, we'll be able to sell it in the next financial year. So it should be fine. Okay.
Okay. Got it. Thanks.
Right. Next question, please. Yeah.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question. Rajiv, on the US, there has been talk across various companies who've reported around significant pricing erosion in the US. Now that is largely for your orals portfolios, but in your portfolio, have you seen anything dramatic on the price erosion side in your inline products?
I think the other products have been fairly stable. It's been all right. I think we've taken a little bit of hit on doxorubicin. So that is one of the big profit shares that we've seen a reduction compared to last year. So there's been a dramatic drop on that one. But see, Nitin, I think that's how US business works. If you're going to see competition, you're going to lose profit. And this business is all about trying to launch difficult to do generics and try to be in the first wave. And that's how it works. And I think you just need to come out with a new rabbit out of your hat, every time. So and that's the nature of the beast. Yeah. Okay.
Okay. And secondly, on our non-US businesses on the formulation side, obviously you talked about the lenalidomide launch in a few geographies that will happen. X of that, how do you see these geographies in terms of the growth visibility for the next 2-3 years?
It's doing well. I think all our subs are profitable. So Brazil has turned profitable this quarter. That's done well. Canada is doing reasonably well. Our other smaller subs like Singapore, Philippines are doing well. We're happy with our strategy of focusing on non-US markets. So these markets now are even on a base case are representing about 13 to 14% of our top line. So there's been a good diversification of our revenue, which was these markets contributed almost nothing 3 years ago. So I think we're happy with how we are progressing, and we're also looking to expand other markets. We're looking for assets in other markets. So I think the way this business works is, these are the sweet spots. I think one, you need to have a smart US portfolio, which are difficult to do. You need to have a smart branded generic business. And three, you need to have a geographical diversification. I think you get these three things right, I think then you can run a successful generic business. I think that's how it works. That's the formula for success, if you ask me. So I think that's what you need to work. Okay.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, sir. I just want to understand, in terms of the domestic formulations, where, our earlier top line used to be around 800 to 1,000 crores. How soon can we get back to that? Understand the COVID impact, but X of COVID impact also, when do we see returning back to that domestic formulations?
I think our peak sales were about 800, and I think out of which 500 was Hep C, Rahul. So at that peak year, so that Hep C has now dropped to annualized has dropped to I would say about 40-50 crores. So there's almost a 90% dip in that business. So in terms of coming back and all, we are doing well in these segments that we're operating in, and I think we repositioned our portfolio and focused on the COVID products. So I think, you've seen the repositioning that we've seen on the COVID, and that has done, wonders for us last quarter. And we have a good position in the COVID portfolio going forward for the next few months. See what COVID has done a lot of disruption, honestly. What has happened is today 20 to 30% of the growth of the business is COVID or COVID related drugs or COVID related, supplements and so on and so forth. So without being in COVID, you can't grow in this business. Okay, that's one. So I think in COVID, we have a fairly reasonable strategy. And, but, the other businesses, we are doing reasonably well in cardio and onco and gastro. So what we have done is to increase sales, we have launched a division called NATCO Reach. So we're going to have about 150 to 200 reps is what we're targeting. So what we believe is this division will focus only on COVID products and other diabetes and all for GPs, because one of the biggest things that I've seen in COVID is a lot of patients don't go to corporate hospitals in the middle. They'll actually get in touch with their GPs who treat COVID initially before they go to corporate hospitals. So we have actually launched a division which focuses on general physicians for COVID and also the allied portfolio of diabetes for the basket. So that is one of the measures that we have taken. To increase dramatic sale, this is one way, and and another way is you need to look at an acquisition, a strategic acquisition, which can help you build that momentum. So I think this is one of the two things you have to do.
Right. So because over the next 3 to 4 years, cumulatively, our cash flows are going to be 3,000 to 4,000 crores at a minimum, in my view, in my estimates. So was thinking, why not maybe expensive valuation on the domestic side, but why not? It can be a high cash flow throwing business, right?
You don't want to buy something just because you want to buy something, no. You have to be very careful with how you got to have some minimum return on capital expectations, no. See, even if you pay more, then you need to have an idea with that portfolio where you want to take that portfolio. Just because for the sake of doing valuation, an acquisition you don't want to do. And I think, a lot of people have said this to me many times. You kept so much cash on books, you never did the acquisition. But if you don't find the right acquisition, it's better not to do a bad acquisition. I think this is my philosophy. I think we'll do it at the right time. I think we just have to, we have to find something strategic. We just have to be patient. That's all.
Sure.
Okay.
Fair point. Thank you so much.
Thank you. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Good evening, and thanks for giving me the opportunity. Rajiv, you have been mentioning, right, that you want to buy some strategic assets. So can you, share with us what exactly you have in mind and what kind of deals you are looking for? Will you co-develop a filing with a partner or in-license it or buy it outright?
I think we mentioned that in the call earlier. I think what we're looking for are two things, Kunal. I think one is we're looking for a front-end presence in the US. I'm not looking for any large front-end. I just need a reasonable front-end with basket so that we can launch our own label. I think we've done a lot of licensing deals, for the last decade in the US, and I think especially for the tablet products and all, you need to have your own front-end. The complex generics and all, I'm still comfortable doing out-licensing deals with bigger companies because the regulatory and the expenses and the pathway for that is not as straightforward. So we have changed the model in the US. I think we'll do front-end for our straightforward portfolio, but we will do alliance for complex generics. So that's one acquisition target. Another one is the branded generic space. Anywhere India or any other market. So these are two areas I believe we need to do, which is I think the two big things we need to fill in our portfolio. Gaps.
Okay, just a clarification here. Rajiv, so any other market, I believe it could be maybe a Brazil, right? Because that's your biggest branded market, maybe outside of India.
Not, any reasonable market. We look at a lot of opportunities, but yeah, I think the core markets are India and US. I think these are the big markets. We don't mind looking at other markets also because I'm also very keen on diversification of revenue. But see, you have to test the transaction by its merit. I think so. We're not averse to any particular market, but anything that there are only 2-3. We need to diversify our revenue, build a good brand, branded generic business, and have direct access to the market. If it meets the criteria, we'll look at anything. Okay?
Sure. I just have one more on domestic oncology. Has the competition really intensified or the hospital visits haven't picked up? So do you think that you'll probably be able to go back to a sort of a 400 crore kind of a peak revenue that you had hit a couple of years back?
I think the portfolio is doing reasonably well, but there is price competition. Absolutely, what you said is right. The hospitals are okay now. Like right now, if you ask me this month, things are fairly normal. Yeah. So at the peak of the pandemic, again, sale dropped a bit. So there's a lot of yo-yoing in the sale in onco, and so I think I'm not able to predict anything. But so we have good pipeline, we have good launches. So the portfolio is doing reasonably well. I will not say that it's not doing bad, but again, we have seen we faced the brunt of the pandemic and the erosion in the portfolio. Both we have seen. Yes.
Right. Thank you, and all the best.
Thank you.
Thank you. The next question is from the line of Kunal from Valum India Discovery Fund. Please go ahead.
Thank you for the opportunity.
Kunal, you're sounding very distant from the phone. May I request you to speak through the handset?
Yeah.
I wanted to understand on the CPR judgment. Could you please throw some light on specific? I don't want the exact. We don't want the exact details, but could you please throw some light on the reasons why the judge decided to to rule against us and grant the injection to the innovator?
Why did the judge decide to rule against us? Is your question?
Yeah, because we had fair amount of. As a company, NATCO had fair amount of confidence that this would work in our favor. So just, I don't want to know the exact the legal thing aspects of it, but just, does it materially reduce our chances of getting a better decision as we appeal to this, given what?
I personally believe we have a very good case, but obviously the judge disagreed with us, and I think we believe we have some very good points, and I think we're taking it up in the appeal, and I think. But that's the nature of the beast. In business, when you do patent litigation, you're going to get some decisions in your favor, and some decisions sometimes go against you. That's the nature of you have to And that's the nature of the business. And and regarding the judgment, I mean, our lawyers still believe that we have a good chance. We are appealing, and we'll see how it goes.
Sure. And just one question. Revlimid Canada, would it be launched in this year itself in the March quarter along with Revlimid Revlimid in the US, or will it be launched at a different timeline, either this year or next?
Yeah, I think we are bound by confidentiality about the date. I will discuss it. I will speak about the date as soon as we are closer to the launch. Yeah.
Just last question from my end. I wanted to understand whether are we looking to augment our ANDA pipeline, given that because when I look at the pipeline, we do have high value assets like ibrutinib and Revlimid coming up in the next 3, of course, Revlimid this year and ibrutinib after 2, 3, 4 years. But do we have any more plans to add more medium-sized assets which are more niche in nature, so that we may have more continuity and less peaks and troughs in our US revenue?
I think we have, as a portfolio, we have a lot of niches. Those are 2 years fight, right? I mean, we have few other niches where we have FTFs. They're obviously not as large as Revlimid. So we have a very good pipeline. We have about 8 or 10 ANDAs so that we intend to file this year. So I think we have a robust pipeline. In terms of the approval dates and launch and all, there's some things are 2-3 years away, but some things are 7 or 8 years away, depending on how the litigation goes. See, you need to invest for the future. That's the nature of this business. If you really want the big jackpot, you want your 2028 earnings to be very good or 2030 earnings to be very good, you need to invest today. And you need to balance it out. I mean, like you look at all the big products that we have filed, the benefit of that, these are stuff was filed about 10 years ago, right? So unless the really good stuff, you need to do 8-10 years ago. And, that's how the business works. So you need to mix it up a little bit. So you need to take care of your future 7 to 8 years and again balance it out with the near term. So I think we're trying to do that with our pipeline, but we like doing things which are more long term than near term. I think because I believe that's where the real value is.
Got it. All the best. Thank you very much.
Thank you. The next question is from the line of Jay Shah, an individual investor. Please go ahead.
Hello. Hi, my question has already been asked, so you can pass on to the next participant. Thank you.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Thanks for the follow-up. Rajiv, my question was, for CTPR, as we understand that the patent will go off in August 22, would you say there is enough complexity on the product that even if it goes off patent, it would still be good enough for us as a revenue opportunity, or would you say then it will not be very attractive for us? Just to understand.
See, the thing with August 22 is if the launch happens in August 22, there will be more competitors. So when there are more competitors, obviously the value will not be as much. It will be more valuable if it happens in this financial year. I think if you were to weigh whether it's better this financial year as opposed to next financial year. To answer your question, it's better if it's done this year as opposed to next year. But again, we just have to go with what the judge says. So let's wait for the court verdict and then we'll see how the things fall in place. Yeah.
Okay. And just one last question, and this is in continuation with the previous question on the volatility. And I understand the efforts which we've put 10 years back have always yielded results. First it was Copaxone and then now Revlimid. But on the domestic side, and last year, a similar quarter when we had discussed, are you looking at that the secular pillars of growth which can sustain a 10-15% growth? How are you looking at building those pillars, or would you say over a 5-10 years, NATCO will remain as a company which would more focus on one-time big opportunities? How should I understand over the next 5-10 years? Not near 3 to 5 years. We understand there is a good near-term tailwind, but beyond that, how would NATCO be built as a company?
I think it is obvious to us as a company that, we need to have more stability in our earnings. I think, when we're a smaller company, we could take these risks, and when these things happen, there's a disproportionate increase in our earnings. But now I think we reach a more mature stage, and I think we're more stable portfolio is required. I think absolutely right. I mean, we don't have an established portfolio, let's say, a larger peers of ours, like a Reddy's or a Lupin or a, Sun type of portfolio. But the thing is, you have to put yourself in my position. You cannot recreate that basket that they have in the branded generic space because these molecules have been around for the last 20 to 30 years. I can't launch, let's say, for example, Atorvastatin and try to do something dramatic on that because, that ship has already passed. So what I can actually do is only do newer products. That's something that is in my control. So what you will actually see the benefit of what we are trying to do. I mean, it looks like it's, we're being disruptive, but see, if you were to establish a very large brand of, for example, a product like, Apixaban, for example, this product is going to be around for many years. And the benefit of that you will see in the next 7 to 8 years, because a lot of these brands which were about 20 crores, 30 crores about a decade ago have become 80 crores, 100 crores because of, general increase in the market and, more acceptance and just general secular growth that has happened. But I think the benefit of what we're doing, you'll see in the next 7, 8 years, which will bring about more stability. But in the near term, you'll see a lot of volatility because we're trying to do something, we're trying to get into a market where, through, litigation and also that's why it brings about volatility. But I think we'll see more stability as time goes.
Sure. Thanks a lot. Thanks for that.
Thank you. The next question is from the line of Shivram Gupta from Astermine. Please go ahead.
Sir, I came back in the queue. I have one more question. In fact, two.
Go ahead.
How is our business in the emerging markets like the Brazil and other countries that we are in right now? Number one. Number two, we've been a replicator of complex molecules and all. Are we making any efforts to develop our own molecule or drug for any of these diseases that are prevalent in the industry in the world right now?
To answer the smaller market, I think we already spoke about that a few minutes ago. I think this business now is contributing about 13 to 15% in that region. So we're doing well in this business, and we're trying to scale this business up. Regarding, we're primarily a generics company, obviously. So I think that's most of the Indian pharmaceutical market. I think most of our revenue comes from generics. In terms of your question specifically, are we doing any NCE work? We're doing some work. I think it's very early stage. There's nothing I don't have anything to report at this time, but we're doing some work. To answer your question, yes, we're doing some work.
Great, sir. Thank you so much.
Thank you. Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Samir Shah from ValueQuest. Please go ahead.
Yeah, hi, sir. Two questions. One is on the agrochemical side. We seem to be following a similar strategy of targeting blockbusters. So, what kind of ramp up or team size, or you are looking at this as a optionality to the business, or you will also make this as a sustainable larger business? How are you looking at this business?
I think this is a reasonably large business, and I think this product is a very large product, and this product represents almost 15% of the whole agro business. So it's a very important product, and so I think sometimes, as I said, these things work, sometimes they don't work. That's the nature of this business. We believe that we bring about 10 to 15% of our top line coming from agro. It's a good diversification. So I think this comes back to the earlier question the other gentleman asked. We don't have stable earnings, and how do you get stable earnings? I think how do you get stable earnings is when you have a more diversified portfolio, which is diversified in terms of therapies, segments, and geographies. That's what gives you stability. I mean, that's what stable earning in my world. That's what it means. I think these segments and these entries that we're trying to do in these markets trying to bring about that stability. I think that's what we're trying to do.
Right. And in terms of, segments, like biologics or, some other, these acquisitions. So one you said is US front end where you can, market your own molecules. But anything else that appeals to you?
As of now, I think our focus is on our US front end, and our focus is on diversifying our branded generics business. I think these are the two capital allocations I would like to do in the event of acquisition. I think these are the two things we are looking at this time. In terms of biologics and all, I'm always tempted, but again, that's a different, again, it's a very, how do I say this? It's a large capital allocation and which is long, long duration of return. And we're doing a lot of stuff which is 8-10 year return kind of stuff. A lot of the ANDAs we're filing now are, launches in 2028 and 2030. So I think we're already fairly, investing in stuff which the payoffs are 8-10 years. If you add biologics to it, then you're adding another one which will take about 7 to 10 years. So you have to be, you have to be very. If I see more cash next year, maybe I'll start making the capital allocation. But at this time, I'm not making that allocation at this time.
Got it, sir. Thank you. Thank you very much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks. Rajiv, just on CTPR again. So for your India agrochemical strategy, how critical is a favorable court decision in the launch in the Rabi season for this product? Does it meaningfully derail the strategy for this business if we don't get a favorable verdict?
So as we spoke about, I think if we don't get a favorable verdict, then obviously the launch will be in August of 22. So if the launch is in August of 22, then obviously the upside that we would have got for launching this year, because if you launch now, that's where the real upside is, isn't it? So, right. But Nitin, you just have to wait, yeah. So I think let's wait and let's see what happens. Okay.
And secondly, in terms of your filings for the US, anything that you're looking at for filing? Any large filings in your assessment due for this year that can possibly come through?
I think so. We're targeting at least 2 to 3 first to files. So I think we'll speak about it, I think, as the year goes by. By March, I think we're hoping to report at least we've got 2 to 3 first to files, and that's where we are. Yeah. And very interesting product. Okay.
2 to 3 first to files before March.
Before March is hopefully, I think if all goes well, yes. I think that's the target.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Viraj from Securities Investment Management. Please go ahead.
Thanks for offering. Most of my questions have been answered. I just have one question on Revlimid. Just more from understanding perspective. So, we have a volume sharing agreement with our innovator, and similar agreements have also been made by other competitors as well up till 2026. So, if in case in the eventuality any of the supplier, cases any supply side issues or any regulatory issues in the or facility, and then hello.
Your voice is breaking terribly.
I didn't understand your question, my friend. Can you?
Yeah, is it audible now?
It's very garbled, your voice. If you can can you carefully, slowly speak and ask your question again, please? I can.
So my question is on Revlimid, and it's more of a understanding perspective. So we have a sharing agreement with the innovator, and similarly other competitors also have a.
But once again, your voice is breaking terribly. May I request you to come in a better reception area and talk through the handset, please?
Handset only. Is it better now? Hello?
I'm sorry, my friend. I'm not able to understand your question. Can you just dial back again, please, if you don't mind? Okay. Next question, please. Yeah.
Participants, you may press star and 1 to ask a question. The next question is from the line of Jay Shah, an individual investor. Please go ahead.
Hi, Rajiv. Just one question. So what kind of a strategy do we have for the agro business for the next 3 years? Like, are we looking to scale up organically, or are we looking to acquire some company? Like what is it? And also you're talking about some pheromone-based product that we're planning to launch. So when are we expecting that to be launched? Yeah, that's it. Thank you.
I mean, we have a whole pipeline. I mean, typically I don't reveal the pipeline, in the call. We announce once we make enough regulatory progress on these pipelines. So we have, an interesting set of about 10 products I believe are very interesting and which could make a difference. In terms of pheromones, I think we launched one pheromone. So we're the first pheromone for that particular product. We launched a product for cotton, for a pink bollworm, which is one of the pests that affects cotton. So that product has been launched for this season. So we did a launch this year. So that is driving some of the revenues for this quarter. So we'll see some benefit of that. So we are betting one on the pheromone platform plus our, and also our chemical platform as well. So we have a portfolio of products. That's correct.
Just one question on this. Would the agro business be completely domestic, or like what kind of sharing do we see between domestic and the international business?
We're looking at both the opportunities, but at the near term, it's primarily driven by domestic.
All right. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Viraj from Securities Investments. Please go ahead.
Yeah, am I audible right now?
Sir, we can hear you, but it's still the same.
Okay. Hello?
Go ahead, Viraj.
Yeah, I just had one question on Revlimid. So we have a volume sharing agreement with the innovator, and similarly other competitors also have a similar agreement. What happens if in the period between up to 2026, if any of the suppliers is facing a supply chain issue or faces a regulatory ban or an oversight, so does the volume come to the first player who has filed the product, or it goes to the innovator?
I can't answer that question, Viraj. You're playing out a scenario. I can't answer that question.
Okay, so in our case, how are we managing the supply chain or the regulatory risk in terms of, any perspective? How are we kind of,
I can speak for myself, Viraj. Okay, that's a very good question. What I have done, Viraj, is I have kept 2 plants. So I have, our primary plant is out of Hyderabad, where we got the approval, and we also have a backup plant in Visakhapatnam, which is in the SEZ in Visakhapatnam. So we also have, we filed a CB30 there. So even that got approved. So we actually are approved from 2 sites. Our primary site is Hyderabad. Our secondary site is Visakhapatnam. So because it's such a large product, so we wanted to make sure that we have 2 facilities. So I'm happy to tell you that we have approval from both the sides.
Okay, and what are the challenges you see, in terms of scaling this up and capitalizing on this?
What challenge do we see in terms of capitalizing?
Yeah, the risk in terms of capitalizing it. Yeah.
I think I covered the first risk. You asked me, do I have a backup facility? Yes, I have a backup facility, and I have, we have approvals from both the sides, so which is very good to be positioned to be in. In terms of the upside and all, let the market formation happen. So, there's a simple rule in life. How much, it depends on, how the competition comes. If there are many competitors, and obviously, you will see further erosion. So we just had to see it when the other guys come, and then we can make a judgment of where we are. So I think I don't have an answer to that question. So I think only time will tell.
Sure. Thank you and good luck.
Okay.
Thank you. The next question is from the line of Jay Shah, an individual investor. Please go ahead.
Hi, Rajiv. One question on Revlimid. So we have an arrangement of revenue sharing about 30-70%. This might be a naive question, but does that arrangement stay even after the patent expires in 2026? So, is there any way that we can amend the agreement after because the profits have been very, very low.
The arrangement is the way we have signed the agreement. I think, if you make a lot of money, you'll share a lot of money. If you make less money, you'll share less money. That's how it works.
Absolutely. All right. Thank you.
Thank you very much. Next question is from the line of Rahul Veera from Abacus. Please go ahead.
Sir, just one quick question on Revlimid. In terms of the backward integration, like securing the supply chain from KSMs to APIs, where do you see any risk there in the system in terms of our volume that has been decided for us?
In terms of supply chain, in terms of the raw material supply, you're saying?
Yes.
We are secure on the raw supply. I think we have already ordered the quantity that is required for the launch, so we're good to go. I think we have secured everything. And because it's such a large product, we bought enough API which will cover enough demand. So we're all set to go. I think I don't foresee any challenges on the launch. We have ordered the API, we got the capsules, we got both the sites approved. We have covered every possible base. So I think we played this out in our head, and we have done all the investments which are required to secure the launch.
Right. No, just a thought process. Like because of the COVID, a lot of plants, API plants, or even different facilities, we saw some shutdown. And as you mentioned out at the starting of the call, that COVID is here to stay. And suddenly it shouldn't happen that because of a supply chain from our raw material suppliers, like the plant at the last moment or during our launch time is shut for 2 months and we are stuck.
No. I think we've been very cautious in this product. I think we have ordered the API. We already have stock. And as you can see, we have we have approved 2 sites for this product. So we have done everything that we should do to protect this upside.
Sure. Fair point, sir. Thank you so much.
Thank you. The next question is from the line of Ashish Thavkar from Motilal Oswal Asset Management. Please go ahead.
Yeah, thanks for the opportunity. So one question on this Coragen. Earlier we used to guide for around 200 to 250 crores in peak sales if we had got a favorable approval in time. But supposing if the approval comes obviously during the FID time, would you still say that whatever we have guided, we could still make 30 to 40% of that number?
You're asking me something it's hard to judge. What I can tell you is this, okay? I'll be very straight with you. If the launch happens now, we'll make more money. If the launch happens later, we'll make less money. I think that's the best way you can answer that question.
Okay. But in terms of quantum, like less would be far lesser, you're saying, or you would still be satisfied at the end of the day?
I'll be more. It'll be nicer, if it happens sooner than later. But end of the day, see, we have to hope that this is all subject to the court case. I think we have said that in our communication many times. That what I can tell you is the opportunity. I can tell you that we're challenging the patent, but it's all subject to the court verdict. And I think if the court verdict is favorable, yes, of course, we'll have the upside. But that's how it works. If we get it right, we get it right. And if the court verdict is not in your favor, then that's the nature of the business. Then you launch later. So, but that's a risk that you take, and sometimes they work, sometimes they don't. So that's it.
Yeah. Fair enough. So next question on this, obviously our arrangement with the partner for Revlimid. So was just curious to know why are the terms more favoring the partner and not us in terms of when it comes to profit and revenue sharing?
I signed that agreement many years ago. I signed it when I was a much smaller company. So I think at that time, we needed coverage of costs and so on and so forth. So I think that's the nature. We had signed it then, and at that time in life, we were not such a large company. Will I sign that agreement today? Obviously no, but you signed it then, and you honor what you signed. So that's how it works.
So would it be fair to assume for Imbruvica the terms would be in our favor?
Yeah, Imbruvica is a higher profit share. It's a 50-50 share. So plus the cost of API, which is captive. Then we actually get majority of the revenue in our favor. But But that was signed much later, so obviously, we got, and we invested a little more on that. So.
Okay. Yeah.
And a bigger company now then, so I think, it's a function of how much of the money you're putting on the table, right? If you put less expense on the table, then obviously the other partner will ask for a higher share. But if you put more money on the table, then, obviously you can ask for a higher share. It's all directly linked with what you're willing to risk.
Yeah. Yeah, this is helpful. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Alisha Maharva from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question. So my first question is with respect to in the domestic business, what is the strategy to grow our cardio and diabetes portfolio? Because it has been, we have been quite positive on it, but what is the strategy to really grow it?
I think we spoke about that a few minutes ago. I think, we have these three segments that we are active in: gastro, onco, and cardio-diabeto. And I think we have a good pivot on the COVID portfolio. And I think, I alluded to the products that we launched in the COVID portfolio, and last quarter we did reasonably well. So I think we are there in all the major, growth portfolios at this time. So we have a very good pipeline. I think we spoke about molnupiravir as well, so that's going to be a big product as well. So that's it. I think we're looking good, but it will really make it a very large business, and we also need to obviously probably do an acquisition because we still have a very limited coverage. For example, before we launched this new division that I spoke about, we only had 300 reps for whatever business that we do. So, if you look at yield per man, I think ours is probably one of the best in the industry. But again, I don't cover large set of doctors. I mean, if we talk about our other peers, they all have 5,000, 10,000 reps. We only have a fraction of that. So I think to achieve that, you need to cover more people and have a larger portfolio. So either you get that through more launches or you get that through an acquisition. Okay.
Sure. And with respect to the agrochemical portfolio, so while we are expecting a Rabi launch for CTPR, and last call you did mention that there's a pink bollworm product that you have launched. What is our agrochemical pipeline looking like? What are the number of launches we're looking at doing, say, next year if we want to be in time for the Kharif season for this business to grow substantially over the next couple of years?
We have a pipeline. I think the big one, obviously, the pink bollworm we already launched. Okay, so that is already there in the market. So we just did a launch this year. I think it's a new concept we are selling. It's the first time in India. So we'll see the benefit of that in the next couple of years. Regarding chlorantraniliprole, I mean, it is subject to the court verdict. So so we'll see how that goes. In addition to that, we also have other products, but they will start kicking in around 22, 23. So we have a pipeline. As I said, we don't usually reveal our pipeline. I think once we are closer to a marketing approval, then we speak about that. So, but to answer your question, we have a good pipeline. Yes.
Okay. Thank you, sir.
Thank you.
Thank you very much. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity. On agrochemical, could you share what is the burn that you are taking in your numbers currently? What is the cash burn?
I'll tell you top of my head. I can't recollect exactly, but I would say about 15 to 20 crores a year. I think that's the burn we're probably facing at this time.
You said 50 crores?
15 to 20 operationally.
15 to 20.
Okay. Plus depreciation on the asset. I don't recollect what the depreciation on that asset is, but it's 150 crore to 200 crore capex, so, and depreciation on that. Plus the cash burn of about 15 to 20 CR at this time.
Right.
Which is, we're already, it's reflected in the balance sheet. So.
Okay. And on the pheromone product, are there entry barriers which would restrict the competition in the product going forward? And something on how fast this can scale up, what's your expectation on the scale up of this product?
So we're working with our partner ATGC on this. So we're out, the technology is from them. In terms of scale-up and all, so pink bollworm has been a reasonable launch, but the problem with the pheromone platform is the adaptation. You can't. It is not like it's not like a generic when you already have a very large market and then you're cutting price and you're entering and the market is already well developed, so you just have to do a discount and you start paying market share. Pheromones is the exact opposite. So what it is essentially what you're trying to do is you're trying to build a concept and sell the farmer the concept of using the product. So that takes about 2-3 years. So I think to say that there'll be a dramatic increase of revenue, probably not. I think it'll probably take a couple of years before you actually see the benefit of that. At this stage, I think we're just trying to get the adaptation going. So people have to adopt, so it takes time. So, but you'll see the benefit of that over a period of time.
Thank you very much.
Yeah.
Sorry, sir, go ahead.
Yeah. So I think this is it. So I'll take one last question if anybody has.
So the next question is from the line of Kunal from Malam, India. Please go ahead.
Thank you very much for the opportunity. I have a single question. I wanted to understand commercially how hard would it be for any player, considering after the last set of agreements we would have probably 8 to 9 players in development who would come into the market gradually. So how hard would it be for any player to build share? I mean, the reason why I'm asking is that if it is hard for any, and I'm not talking about building share commercially. So in terms of the commercial challenges of getting a market share, because if the rationale which I'm thinking about is that if it is hard for someone to commercially build share, then it will have a higher incentive for them to probably reduce the price a bit, and that will be dilutive to all the players involved. So because we saw the same case happening in the case of Copaxone, where Mylan found it very hard to gain share because of XYZ reason, and the price had to come down quite a lot for Mylan to gain a reasonable share. So so effectively Copaxone ended up making half the profits of what it could have made if the pricing would have not been eroded. So just applying the same scenario to Revlimid, how do you think about that?
I think you can't really predict the future. I think what I can say is that we have the first mover advantage. I think that is worth something, and so we are the first generic, so that makes a lot of difference in our business. And typically on these REMS type of products, we are the first generic, and once the registry is and you have started the registry and you are the first generic that's getting dispensed, I think generally you tend to do reasonably well and you get to keep market share. So I think the price and all, you're selling generics, my friend. Price has to go down. That's the nature of the business. So I think initially when you're in the first wave, obviously you make more money, but as more competitors come in, prices do fall, but that's the nature of it, and I think you can't really stop that by any sense. You just have to come up with more interesting things and offset what you're losing. I think that's the nature of the beast. I think that's how I can say it. Okay. Thank you.
So, but if the price declines much faster than what anybody would expect in a scenario like this, that could also be profit dilutive. Would you say that?
Obviously, no. I think but the thing is, until the market formation happens, until we see how the other generics play out, it's very difficult to judge. So only time will answer that question. What I can only tell you is that we'll be the first generic, from what I understand, based on what is there in the public domain. I think we should do well, and we're hoping that we should do well with this product. Yeah.
Thank you very much.
Okay, thanks.
Ladies and gentlemen, that will be the last question. I will now hand the conference over to the management for closing comments.
No, thank you so much, guys. Thanks for attending the call, and very nice interacting with everyone. Thank you so much. Good night. Yeah.
Thank you very much.
Thank you all. Yeah.
On behalf of Investec Capital Services Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.